Alright folks, welcome to a semi-weekly market recap, also a missed trade recap, and also a market recap, which is a semi-weekly market recap. Now this past this whole week, my bias was correct, right? As you guys saw right over here, I wanted the market to go here on DXY, and it did. And eventually, that's why you guys saw me not take any trade throughout the whole week. I didn't even take any trade this week. I did have a missed setup, which is a TNR missed setup, which we missed on Wednesday. And that trade, I don't want to say woulda, shoulda, coulda, right? I was going to take it, but it didn't make sense to me. I had some controversies, right? Depending on my bias, not really on the bias, but we will talk about it, right? Because we could have traded to the key level, right? Which Romeo talked about, right? Because trading to the key level is also a high probability. Also trading, reacting from the key level is also a high probability. But I personally, during that time, I'm always on the side of reaction from the key level, right? In this case, it told me that this specific trade wasn't a trade to the key level. It was a reaction from the key level. So this was the actual trade that we should have taken. And that's why we missed the setup. But we're going to cover that lesson. We're going to talk about the missed trade recap. We'll talk about the lessons here. Now, as I said, I had my bias wrong this whole week. Now, I didn't have my bias wrong the whole week, right? Monday, Tuesday, Wednesday, my bias was perfect, right? We were bullish to the key level, right? Then eventually I was like, okay, I'm only going to take a short once this key level gets soup. As you guys know, in a daily range, whenever there's an important key level, that key level is going to get sued before market has anything. Now, it didn't really make sense to me that why am I going bearish here? Although it's a bearish daily range doesn't really matter. What matters is the higher time frame, right? Now, the monthly time frame was a big importance in this specific price session on a daily time frame, which we're going to talk about. But I had my bias wrong, right? But we didn't take any trades, so we preserved capital. But it was kind of confusing to me. I was like, okay, market didn't offer me a setup, this past 2 weeks. So why is it doing this, right? Now, because since I have my bias wrong, the market is going to give me the setups that I want, right? The market not going to give me the setups that are very high probability. Even if it does give me a setup, it's going to be patternized, right? So you want to avoid that. So over here on Wednesday, we did have a setup right over there. Like Wednesday, I did have a setup also. On this specific Wednesday candle, we did have a bullish setup, which never got taken out because, as you guys know, your system should be the one, your trade should be the one to not get resouped. If it does get resouped, you need to check your, your lower time frame price action. And the reason I didn't take any trades because on Thursday on Thursday I'm supposed to be bullish, but since the lower time frame didn't make sense to me, I was like, although the high time frame makes sense, but the lower trade doesn't make sense, I'm not gonna take it. I think all of them needs to be aligned, as you guys know, obviously, right? This is zero property, right? If you have everything correct, but as 1 minute missing, is automatically zero, right? What is 100 times zero? Zero, right? This is how you gotta go around trading. Also, the trading is overall a mathematical type of. Although we're not using math, we're using the chart, the candles, because the candles, history always repeats. Right now the USA. They're following the Rome cycle, right? You just go watch that. Every country, like the majority countries, like every country is following the Rome cycle where the empire will eventually collapse, right? If that happens in real life, that definitely happens in the chart, right? So it's cycles. History repeats, right? Right? History always repeats. Right, and somehow people don't learn from it, right? But in trading, you definitely do learn from it because you're not running an empire. You're just basically tapping a button, right? That's all you're doing. Now, I had my bias wrong, as I said before, but I didn't take any trades, right? And I had my bias right on Monday, Tuesday, Wednesday because I was obviously bullish on DXY, so I wanted DXY to get tapped the key level, then look for a reaction to the downside, right? As I outlined over here, then go to the downside, but that number offered me. I was like, okay, no setup. Now, the market went way beyond the daily CRT, which was at the Wednesday candle. I was like, oh, market's going way beyond. Market just did a big dump, right? This big ass dump right over here. I was like, I I probably have my bias wrong. Let me check my bias. I eventually found out what was wrong, and eventually found out, okay, I had a miss setup here, which that miss setup, I I don't want to say was, because I didn't take it, right? But as it's a mistrade recap, we have to do a recap on it, right? We have to journal it. Now on this mistrade recap, right over here, which I had, I was like, man, that trade sounds so good, but why isn't the technicals telling me isn't it a good trade, right? Why is my lower time frame telling me that I shouldn't be taking this trade, right? But although it made so much sense, right? But if you go back in a lower time frame, the reason why, if you go back to the 4-hour time frame, which matters, because this is supposed to be the New York OTE. Although Paul really wanted, like, New York never retraced, so it was saying New York OTE. Keep in mind, if the market always did a New York OTE, it isn't going to, everybody's gonna catch on, right? So that's what needs to be a cycle. And there's only 2 cycles for the New York continuation, right? Going to be either OTE, retrace all the way up and then go down lower, or just rally to the downside without any retracement. And when you rally to the downside, you usually will give you a retracement a little bit, but not where it's not where there's going to be a daily range, right? And then now there's going to be like an actual 0.50% mark retracement, right? There's going to be a quick retracement, give the setup, and market goes on. Now, on this setup, I was like, this is such a good trade to take to the downside. It clearly makes sense because this pattern right over here, I'm like, I have seen this pattern before, right? I've seen this pattern before in market makers, right? Basically CRT, right? This is like a total soup, OTE expansion. I was like, I've seen this pattern because I used to trade market makers models, right? Market maker model, I'm still literally trading market maker models, right? But a little bit more advanced because CRT makes it much more simple to find the original consolidation, right? But I was looking at it, I was like, this pattern sounds so familiar, right? Why am I looking for longs, right? But I was like, also there that time I was like, it looks so good to short, right? Now, because this was obviously a total soup, big reaction, and also with a OTE, I was like, this should make sense to take a short. Why am I not taking a short? But eventually, look at my 4-hour time frame. I was like, yeah, the 4-hour has it's supposed to be like a retracement, right? Because if the 17 o'clock purged out this CRT, so it basically did some sort of a OT pattern, right? We souped that we made a high, low, higher high, lower low, so we should be seeing some sort of retracement. So I'm not gonna take the trade because I do need to see some sort of retracement before I do so. So I'm not gonna take the trade. And eventually, I didn't take it. Then eventually, the market went to the take profit, which is still going, right? Still going to our target, because our overall goal is this weekly CRT low, which have to get met because this is a monthly CRT low. Once this low gets met, then we are going to be good to go to our high time frame targets. Now, that's why I didn't take it. Now, that's a very important lesson because my lower time frame, as I said, the lower time frame told me it doesn't make sense to take it short because there's no retracement, right? There was no New York OT, because you guys know, New York is the big boss. New York is the one to determine whether this move is going to work out or not. New York is determine whether the landing session is going to make the high of the day or low of the day. New York is basically the confirmational tool. Is the most important time, because where does the most money comes from? New York Stock Exchange, right? These from the USA, because the world currency, etc., right? So New York confirms almost everything, right? And any move that happens, New York confirms it, right? It's moved to the downside, although the confirmation was way beforehand. But since you're waiting for a New York situation, since you're waiting for a New York to confirm it, you would have caught it around here, and that would have been even cleaner, right? Because over here, you had to put like a wider stop loss. You could have traded that time, but it's not very optimal, right? Because unless you're very professional, unless you're very veteran or very experienced, taking these trades like over here, it's gonna be difficult. Now, as I said before, that my lower time for telling me didn't make sense, because to me, I forgot, I didn't forgot, but I personally thought was like, we made a clear pattern of a OTE, so we should definitely be retracing. But I forgot that when the 17 o'clock, when this specific daily candle, that's the 17 o'clock, the 21 o'clock, I'm pretty sure, right? The the 1 a.m., the 5 a.m., the specific daily candle, that specific 4 hour, the specific days, 4 hour candles, I personally thought this soup of this other high made a, made a OTE pattern. I was like, okay, should be retracing. But I forgot that it has to happen. The pattern has to happen during a specific day. Although the pattern did happen during this specific day, but the way it works is that the 17 o'clock gotta be arranged. That 21 o'clock could either soup out the 17 o'clock, then make the OTE pattern. Then we would see a OTE retracement, like a deep retracement for going out lower. Or if it's not like that, or we could see 21 o'clock range, the 1 a.m. make a soup of it, like an actual total soup, not S&T, then go down lower. Then we'll see an actual New York OTE, so big retracement before going down lower. So basically a classical retracement, just like this, right? OT, click. It didn't do, the retracement wasn't like to right over here and go down lower. It was deep, then go down lower, right? So that's literally a New York continuation. But in this case, since it didn't do that, we would just see a continuation. Now, as I said, if the market repeats the same cycle, people can catch on, right? I said it at the start of the video. Now, the way you know whether it would do a deep retracement before continuing or you just rally to the downside or upside is by looking at the 17 o'clock, the 21 o'clock, and the 1 a.m. If you're bearish, did the 17 o'clock range, did the 21 o'clock super the 17 o'clock candle, or did the 1 a.m. super out the 17 o'clock candle or the 21 o'clock candle? If you did, then you're going to see some sort of a OTE, like a deep retracement. If you didn't, like this, you didn't soup it out, or you did soup out this candle, but it has to happen during a specific day. So that means the 17 o'clock got a range. The 17 o'clock always has to range. You can't soup out a different candle. He always has to range. The 21 o'clock and a 1 a.m. candle is which matters the most. The 5 a.m. doesn't matter because the 5 a.m. if the 5 a.m. purchases out the the 17 o'clock or the 21 o'clock, the 1 a.m. is going to be counted as a reversal, New York reversal instead of a New York continuation. So because of that, we don't need that, right? So our primary focus is on the 17 o'clock, the 21 o'clock, and the 1 a.m. Then the 17 o'clock, 17 o'clock always got a range, right? Did the 21 o'clock purchase the 17 o'clock? No, okay, cool. Did the 1 o'clock, did the 1 a.m. purchase out the 21 o'clock candle? Cool, we could see some sort of deep retracement. Did the 1 a.m. candle purchase out the 17 o'clock or the 21 o'clock? Either of them? No, okay, cool. We're gonna see a straight rally without any retracement, without any deep retracement. Oh, we did, okay. We're gonna see some deep retracement like this before go down lower, right? So that was the overall lesson, which I didn't pay attention to. I was like, okay, because I seen a pattern before, right? When I was trading, because I thought, I was guessing it's memories, right? So I had a memory that happened to me because one time I took a short, right? Around like very deep. I had a setup beautiful short, and at 21 o'clock, the 17 o'clock put out the 13 o'clock candle. And eventually saw a deep retracement. I was like, okay, 17 o'clock can also put out a candle and make a pattern of it. So I keep that in mind. Eventually on here, that memory came in. I was like, okay, I'm not gonna take it because of that, because of what happened. Because at one time I took a short on Tuesday. It was a classical total soup retracement, New York OTE. I was like, shit, I took it too early. The market went up higher, retraced to a specific price point, and eventually rallied down, right? So a big classical New York situation. But that time was the right time to do so, right? Because that time when it did it, it was no, there's two examples, not one. Oh fuck, I messed it up. Right, let me go back and chart actually. Fuck it. It'll just be. Let me show you guys what I mean. I gotta use my memories real quick. Where was the chart at? I gotta think. It was there some sort of a price action deep ones. Fuck. Where was it at? Is it this one? Shit, no, it's a 1 hour candle. No, it's not that one. It should be this one, right? No. There's some sort of deep retracement. Yeah, I don't have it here. Or is it should be this one? Yep, nope. Because you gotta be way earlier on. Like, no, those not a unique situation. Nope. All right, I don't have in memory thoughts because it's way far back. It was a very long time ago. There was two examples, right? One example, I entered too early. It was a classical New York punctuation, which that time I forgot to know. I forgot to look at limitation or edition if the 21 o'clock or the 15 o'clock, or if the 21 o'clock or the 1 a.m. candle pushed out the 15 o'clock, or the 1 a.m. pushed out the 21 o'clock or the 17 o'clock candle. And that time I forgot it. So it was a classical, I entered too early, market changed all the way up and went down lower, right? But other time, it was the 17 o'clock that pushed it out, right? Which wasn't the 21 o'clock or the 1 a.m. candle. It was 17 o'clock primarily pushed out the 10 o'clock candle. And eventually it was a pattern. So market entered, right? I was like, okay, sounds good. Okay. The because I what I saw was that there was no New York OTs, it's just gonna be a rally. But when I entered too early, market retraced all the way up higher, then eventually went down lower. It was same type of bias. Right. In this case, the market retraced all the way up higher, went down lower. I was like, okay, why did it this time go down lower? The last time when the 17 o'clock wasn't there, like this example, right? The 17 o'clock, then the 21 o'clock or the 1 a.m. candle pressure at any high or low, you just rallied, right, without doing any deep retracement. Then why did it do it this time? I was like, oh yeah. Looking back at it now, the reason why that time it did it because I had my strategy wasn't completed, not completed, but it wasn't as efficient as it is right now, right? So it wasn't very efficient. So that's why you led me because I never during that time, my I never looked for a pump above I never looked for a pop above an old high. So it was some sort. It wasn't. Oh, I didn't look for a pop over an old high because I had to wait for the next candle, right? But since I didn't look for that, that's what happened, right? I didn't look for a pop over old high, and eventually I got stopped out, right? So that's why, because my strategy during that time wasn't about looking for a pop or a dump on an old lower or a pop above an old high on a daily time frame. It was just a 4 hour, right? It wasn't any higher than that. So that's why that one overall failed. So that's why, and yeah. And today there was some short side. There was a shorting opportunity, but if you took it, same thing would have happened again. You would have been fucking clapped because what have you been clapped for? Because there was no pop of an old high, so that would have not worked out in your favor. Now that's lesson number one. Now let's go over. Before we go any further, make sure you guys like, comment, subscribe, share, join the Telegram link down below, and let's get into the actual why. So why did I have my bias strong? We have to go back to the monthly time frame, right? So the reason why we had our bias strong was very clear. I had our bias right, but our target got met, so our bias had to change, right? So our target, our monthly 60 high got the reason now we're going to why did I have my bias strong, right? So the reason why I had my bias wrong was that okay, we met our monthly 60 high target, right? Now to me, I thought okay, we're still go up higher, push out this high again, and go down lower, but it didn't make sense because the next monthly candle, right, needs to open, make the high, then go down lower, right? So when it needs to make the high, it needs to go down lower, at least take out some sort of liquidity that eventually pushes out the high, right? You getting it? Won't go up the high, make the high, that eventually rally down there in the fourth quarter out of the year. So it made a lot of sense for me. It made a lot of sense for me to it made a lot of sense for it to go down lower right now than go up higher because my bias is overall going to still be correct to the upside, then go down lower. But since I was premature, right? I was premature, so entered. I thought it was going to go up high. I thought it was going to go up higher prematurely without knowing, okay, the time isn't there yet for it to do so, so we have to wait. Now, on the monthly time frame, this bearish candle can close like this. Why? We don't have to look for a fair price closing to the upside because it was a hammer candle, right? It can't do it because our bias is overall bearish in the monthly time frame. Now, going back here is that the reasoning is because on the monthly time frame, since we made a target, now we need to wait for the next quarter to come around, right? The next quarter to come around. So the next quarter needs to come around, the market needs to go back down lower. Now the first month of the quarter of the next quarter, the first month needs to go and range. So if this candle, right, if let's say the next monthly candle comes around, let me get a drawing here, right? Let's say the next quarterly candle comes around, right, puts out the low, right? Now the next month, the first month of the quarter, puts out the low, and instantly goes up higher, right? Makes a huge range in the monthly time frame. Eventually, the second month of the quarter puts out the monthly high. Eventually, rallies down. And eventually, the third month of the quarter of the 2025 just rallies down and goes overall from there on forward to the downside. So this right over here, this push to the downside definitely didn't make sense because we need to go down. You need to go down lower, take out some sort of liquidity, then go up higher, then go down lower, right? Because it can't just close right here and go up higher and go down lower because it didn't make sense because the first monthly candle needs to range, right? The first monthly candle. It can't just go up here, make a manipulation, and go down lower because the first monthly candle needs to range. Basically, create some sort of a big range. So it needs to go down lower, possess some liquidity, get a lot of money in the market, go up higher, make a big range, eventually manipulate, go down lower from there on forward, right? Simple as that. Now that's the reasoning why I, messed up. So it was very reasonable, very, 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 very much. Now this just helps my mind. It just helps me. This just right here helps me understand the market even more further, right? Because I wouldn't know that market needs to do that without me going through this, right? Without me being wrong. Because as you guys know, any step you take, you need to question why, right? And when I take my bullish bias, later on, because my position was first bearish, target got messed. I was like, okay, I'm gonna go bullish, right? So I was like, okay, eventually once you're bullish, you gotta question why, right? Let's say your boss was wrong, right? You find out your boss was wrong, question why your boss was wrong, right? Like, why was I wrong? What was it? What fucked up there, right? Eventually go off from there and you're gonna find your answer, right? Go to the higher time frame, find it out, right? Because the higher time frame will tell you why. Now on the weekly time frame, our CRT was overall this, as you guys know, bearish candle. Let me mark it out. Now, if I want to go what about this big bullish candle, right? This big bearish candle. This right over here, if it does get respected, on the next monthly candle, we would use this as a CRT also. But our CRT is primarily this. Why? Because the monthly time frame, as I said, next month needs to make a big range. You just need to go take out some sort of liquidity, go up higher. So you wouldn't go down here, then go up higher because it wouldn't make sense, right? Because you need to go up higher first, make the high, then go down lower. That's why, right? So our CRT is primarily this candle. Now, as you guys know, we had accumulation. First candle wasn't enough to go down lower. The second candle wasn't enough to go down lower. So the third candle is rise down also. Now, first candle accumulation, the second candle manipulation, but it didn't hit the key level, right? The key level that needs to go down. The key level needs to go down lower. The third candle hits the key level. Eventually, the fourth candle just rise down, making a classical expansion. But if you pay attention to even closer, accumulation, right, manipulation, expansion, classical CRT model, right? So that's why I have my bias wrong. And the reason I was bullish, I thought, okay, market needs to go up higher, etc., without me understanding that. Because when I made a monthly bias, I was kind of confused, right? I was like, my target got met. Am I supposed to see higher prices or am I supposed to see lower prices now, right? Now that right there just helped me out even further and my system understanding the markets more and more and more. Now on a daily time frame, the way I knew my box was wrong was during Thursday after this big dump that happened around 8 a.m. I'm pretty sure, right? I was like, okay, my box is obviously wrong because the market made a big dump and the news goes to where John Liquidity is. So I was like, okay, I was wrong, etc. I found out why. But eventually, on Thursday, I did have a setup, right, to the downside, right? Up to the upside, but the third setup never got confirmed, right? There was a soup, but market never tapped our model one. Even when it did, yeah, I think it did tap our model one, some sort of a value gap down here. right? He did tell us for buy gap, but I would have not taken that at all because like the kilo of the news is going to the news goes to the drawn liquidity. So I was like, okay, the news going down, so my boss is definitely wrong, right? Now, and one more thing, even if that would, even if this would get tapped, I still couldn't have taken a trade. Why? I couldn't, even if it said it's for buy gap, I couldn't take the trade. Why? Even if I gave a model 1, I wouldn't take the trade. Why? Because, as you guys know, the day trading aspect has to align, right? The day trading, day trading aspect of your system has to align with the higher time frame, and the execution also has to align. Execution was there, but the higher time frame was also, since it was wrong, right? You could have said it was there, but the lower time frame, the day trading aspect wasn't there because in this case, since I'm bullish, they're not talking about SMT. So that okay, the 5 a.m. candle just made the high of the day also, and also you had SMT with the London session, or even if you switch it out, he pushed out the London session low. So the 5 a.m. made the high and the low. Now for a needle reversal, if I'm looking for a bullish reversal, the London session high or the edge session high has to be protected. If it's not protected, meaning that it can't get sued by the 5 a.m. until the reversal occurs, right? So I was like, okay, even with that, I won't take it. That's why that's what you guys know. That's why I praise so much time. That's why I praise time so much. So these mistakes don't constantly happen again and again and again, right? So time, that's why, because time is much more efficient than price, right? So time wasn't there. The time didn't make sense because daily profile is based on time. So the daily profile, the New York reversal always requires the London session or the edge session highs or lows to be protected. Now, if you're bullish, you're looking for the highs to be protected. If you're bearish, you're looking for the lows to be we're looking for the lows to be protected. In this case, the highs were not protected because the 1.5 a.m. high also, and also with the low, you could have had an SMT. Now, whenever the SMT basically means you sweep it out because the one pair stood out while the other one doesn't. So basically stood out. So I'm like, okay, I can't even take a trade even if the market opens set up, even if it has my my beautiful entry model, I can't take it because the day trading aspect is not there. That's why it's called zero property in math, right? That's what it's called. Anything times 0 is always going to equal 0, right? So that's why. Now that's why I didn't take this trade. It didn't make sense, right? Because the daily time frame wasn't there. The daily day trading aspect wasn't there. Now today we have no business. Monday's gonna be a beautiful day, right? Monday's gonna be a beautiful day here. Actually, this video is going to be a weekly market recap also, so keep that in mind. This video is not just gonna be a semi-weekly market recap. We're already 27 minutes in late, right? We are already 27 minutes in. So just make this a weekly market recap rather than a semi-weekly market recap. But Monday, as you guys said, as I told you guys, Monday I was looking for a dump, but market rallied, right? And that rally didn't last at all because there's the OTE. Because DXY still on Monday didn't even hit target. So I was like, okay, I'm still look for shorts. I didn't say I'm looking for shorts, but I was waiting for that killer to get tapped. So I was like, okay, I'm gonna be sidelined. So I'm gonna practice my patience and discipline. So I was gonna wait. So says I was gonna wait. I didn't take any trade. And eventually on Tuesday, I was like, man, I know. I look at Romeo post. He's talked about, okay, you could either take the trade to the key level or reaction for the key level. They're both high probability. Just pick one, right? In this case, he also said you can trade both. But to me personally, trading to the key level is more difficult for me. Not difficult system wise, but psychology wise. The confidence level is not as high as it needs to be. A reaction from the key level is much more higher confidence, right? It's just my personal thing. I feel much more confident, right? Because the more confident I am, the more I can risk. If I'm confident in the setup, I can risk what 2%, 3%, 4%, 5%, right? But if I'm not confident in setup, I usually risk 1% or below it. All right. Now, I don't risk. And if I'm like, let's say, I'm not confident in setup, right? I will still risk 1%. If I goes on loss next trade, I'm risk 0.5%, right? Now, once to make money back, guess what? Now I'm going to feel, okay, am I confident in setup or not? Okay, at the end of it, you can risk more, et cetera, right? So that's that. Now, so we got for that. Now that's why they didn't take it. I mean, all because in that time, as I said at the start of the video, that this trade didn't make sense to me. Now I found out why it didn't make sense to me, right? And eventually found out, okay, I was wrong. This is how the New York OT works, etc., etc. And I also told you guys that why I didn't take any shorts on Tuesday, because Tuesday I didn't have any I didn't have any trading opportunity. Market never respected the right time to soup. So I was like, okay, market didn't soup at the right time, so I'm not gonna take a trade. And Tuesday, never have a setup, so I was like, okay, I'm just gonna take a trade on the next upcoming days. So I just waited till the Wednesday candle to come around. Eventually on Wednesday is when there's this beautiful short opportunity. As I said, the lesson already from it. The lesson on Wednesday is very simple, but I told you guys why I didn't take this trade, because as I said, the confidence level, right? So taking a trade to 30 kilo is less confident for me. Taking the reaction from the kilo is I'm way more confident in, right? And also, it depends on how much you can risk. And also keep it in mind that this trade wasn't a trade to the key level, it was a reaction from the key level, right? So it was a trade for the key level, reaction for the key level. So I would have definitely been confident, but I just during that time, I just didn't know that knowledge. Right now I know beautifully. It's like literally right after that time for 3 hours straight, I was looking at the Twitters. I was looking like, okay, why was I wrong? All right, let me go check this guy. Okay, yeah, fuck this guy. Let me check this guy. Okay, fuck him. Let me go to the chart. Spent like 2 hours and 30 minutes on a chart. Okay, this is why I was wrong, and I found out. Now the lesson of Wednesday is very simple, because Monday Tuesday didn't take a trade. And I told you guys the lesson of Monday Tuesday already. The lesson of Wednesday is very simple, that the New York OTE has to happen, right? The New York OTE, right? For the New York OTE, I mean, right? For the New York OTE, the pattern has to happen during a specific day. During a specific day that we're trading, the pattern has to happen. Now, the 17 o'clock always has to be arranged. The 21 o'clock or the 1 a.m. candle can press it out, then make a New York OTE. But if it doesn't press it out, then we can expect just a rally, quick retracement, just a quick rally without, just retracement and continuation without a deep retracement. So for the new continuation, for the pattern, it needs to happen during a specific day. So the 17 o'clock always needs to be arranged. The 21 o'clock or the 1 a.m. needs to press it out, right? Now, the 17 o'clock cannot press out the 13 o'clock candle and make the pattern, because during that time, we would miss a setup. We would not be able to catch on, and the pattern needs to have a specific day. So if the 17 o'clock puts it out, we're not going to be looking for that deep retracement. We're just going to be looking for continuation if the 21 o'clock or the 1 a.m. candle never, press out liquidity, right? And never souped out in the 21 o'clock candle or the whatever, right? So, and like, why are you repeating this constantly? Because this is my journal, right? This is the way, because I listen to this back and back when I go to the gym, whatever I'm doing. I listen to it constantly, because this right here, because I like to listen rather than read, right? I like to read Quran and stuff like that. But because trust me, 10 out of 10 times you would not go to your journal and look at your journal over and over and over and over. I'm dead ass. You would not look at it, right? You would not read your journal constantly, right? You would rather listen to it, right? Simple as that. That's what we're doing over here. Now, that's the lesson of the week. This is not a semi-weekly market recap. This is a weekly market recap, right? So yeah, that's a lesson of the week. This week I didn't take any trade. I only had a missed trade over here, and I already turned the missed trade. I told you guys why I missed it out, and lesson from it, right? I already talked about lesson. Beautiful week. Now next week, Monday, should be a beautiful week, a beautiful day week also. But before October 4th, on October the 2nd, regardless where the market is, I'm gonna take a trade, because regardless if I get a step or not, I'm gonna take a 0.001 loss size, because my accounts are gonna get suspended if I don't splash a trade in 30 days. Because this whole past 3.5 week, I didn't take any trade. I don't know if it's 3.5 weeks, probably like 3 weeks, but this whole month from September 4th till right now, I didn't take any setups, right? I don't know how long that is, but didn't take any trade ups, which is beautiful, right? Because now that just, you know, making my patience be better, right? Making me wait for the best setups. Although we missed setups, although we did miss like 3 setups, right? Not 3 setups, 2 setups, right? Which we gained lesson from it, so we're not gonna miss it next time. Although that happened, we are practicing our patience, our discipline. You know, we were practicing the good things, right? That actually matters more than the chart, because I could be having the best, I could be having the best system, but if I'm impatient and overconfident, I'm gonna take any fucking setup, any leg down or leg up, and short it down, or, you know, long it up, and eventually guess what happened? That would cause me to be overconfident and impatient, and that would fuck my whole system up, regardless of how good it is, right? So yeah, thank you for watching. Make sure you guys like, comment, subscribe, share. Join the Telegram link in the description below, and I will see you guys later. Very important, one of the most important, and I will see you guys on the next video. Bye bye.